Is the bond market in 2025 on shaky ground? It seems so, as the bond market faces a precarious balancing act. Just picture this. Nearly $3 trillion of US debt is maturing, including a significant chunk of short-term notes. This brings us to a point where the Treasury Department may need to lengthen the debt duration. But wait, there's more. This could potentially overwhelm the market, and that's not all. We've also seen an uptick in the issuance of Treasury bills, and this raises a red flag about market absorption. Can the market take on this escalating supply without buckling? It's a question that's causing some furrowed brows. Compounding the issue are rising yields, which have had a negative impact on the Treasury market. So what does this mean for fixed income investors? They've got a lot on their plate. While the deficit is expected to decrease in 2025, managing bill issuance remains a key concern for fixed income investors. It's clear that navigating the bond market in 2025 will require some deft maneuvering. But it's not all doom and gloom in the bond market. On the contrary, we've seen a record-breaking issuance of over $1.4 trillion in investment-grade US bonds by corporations in 2024. What's driving this surge? Well, a few things. Favorable funding conditions and low corporate bond spreads are playing their part. On top of that, there's been a notable increase in mergers and acquisitions activity. This has ramped up the need for finance, and corporations are turning to bonds for it. As the Federal Reserve lowers interest rates, investors are shifting towards longer-term bonds which offer higher yields. And let's not forget the strong US GDP growth. This economic momentum is providing a robust backdrop for corporate bond sales. Companies are seizing the opportunity, issuing debt to finance their expansion plans, from capital expenditures to acquisitions. Despite the challenges in the broader bond market, the corporate bond market seems to be thriving. The resilience and adaptability of corporations are keeping the wheels of the corporate bond market turning, even in a challenging environment. So what does all this mean for the bond market in 2025? Well, let's take a moment to rewind and connect the dots. The US bond market is indeed facing a tough road ahead. With nearly $3 trillion of US debt maturing, including short-term notes, the Treasury Department may have to lengthen debt duration. This could potentially overwhelm the market. Treasury bill issuance has surged, raising eyebrows about market absorption. And, to add to the pile, yields have risen, casting a shadow on the Treasury market. On the flip side, the corporate bond market is thriving. Companies broke records in 2024 by issuing more than $1.4 trillion in investment-grade US bonds. This momentum is expected to continue into 2025, driven by favorable funding conditions, low corporate bond spreads, and a surge in mergers and acquisitions. Utility companies are notably increasing bond issuance to support capital expenditures. And let's not forget, strong US GDP growth is also bolstering corporate bond sales. While the bond market faces its share of challenges in 2025, opportunities still exist for savvy investors. The key will be navigating these turbulent waters with care. Thank you for watching. Please like and subscribe.